Is it getting recorded? Mm. Anyways, the last unit, International Financial Market, 13th unit. In this chapter, we have various categories of markets, how international markets origin and categories of market, the structural changes and its impact on these market, and how do we select, how do the selection process, happens in raising various forms of funds. Okay, so here we go with the international financial markets. Okay, there are uh, three important functions of these markets. Number one is price, uh, price discovery, and the second one is liquidity, and the third one is reduce the cost of transactions. Okay, so if you look at the origin of these financial markets internationally, globally, 1970s, these capital markets were forced on debt financing, and these equity financings were only raised by the corporate entities which were of domestic markets. And the very reason behind these restrictions was cross-border equity investments prevailing in their own, countries. Investors would prefer domestic equity as against the, other foreign equities. This is because of the risk associated and the implied issues, either related to the currency or related to the apprehensions and restrictions of such investments in the regulators, etc. Major changes occurred when, in the 70s, uh, uh, we, uh, where it witnessed quite fluctuations and expansions of trade volumes, patterns, and various blocks experiencing extremes in fortunes in their exports and imports. Basically, these capital markets became a major source of external finances nationally and with low internal savings. All right. Then the presence of international financial markets has been a total turnaround in the market. The picture has completely changed. Variety of reasons have been attributed for this change, out of which we can attribute uh, the India's presence in this international market for perception of economic reforms, import and export performances, economic indicators, inflations, which consist of single digit, improved performance of Indian companies, and look at lack of investment opportunities worldwide, prospects for opportunities in the global economy, decline in the rate of returns on investments in developing markets, etc. All these led, during 1992, March 1992, government was very firstly permitted, permission was granted for few Indian companies to enter into this equity market. And till date, all these Indian companies have been successfully taken the equity and the related rules. So we've been doing successfully on the global platform. And then comes the various types of markets wherein we can tap, and those are the foreign exchange markets, financial institutions lending, debt markets, equity markets, swaps. Look at the various channels through which the flow of funds happens. That is number one, international money market, and number two, international capital markets. There are official sources and non-official sources. Under official sources, we have various multilateral agencies and bilateral agencies. And on the non-official sources, we have international banks and security markets, under which we can look at the functions and how they, are organized for. Uh, Look at World Bank, talk about international finance corporations, multilateral investments guarantees, International Center for Settlement of Investment Disputes. All these are various channels through which the fundings in the international markets happens. And the structural changes of the international financial markets involved multilateral agencies, bilateral agencies, international banks, euro banks, offshore banks, euro cap currencies, loan syndications, and securitization. Multiple governments from government and non-government sources, and the fund is distributed into many countries. And after the World War II, US and UK took initiation and negotiations for the formation of BRD, that is Bank Reconstruction and Development. IBRD was conceived in July, UN National Monetary Fund and Financial Conference, Bretton Woods. IBRD was confined only to lending to the countries only after its loan has been backed up by the sovereign guarantee of the borrowing government. IDB was created in September 1990, and IDA was providing long-term loans. And we have bilateral agencies, government agencies, which are based on single country, provides the including medical disaster relief for people developing countries. One of the oldest and largest bilateral government agencies is US. 1994 US 8, though its Center for Population, Health and Nutrition, it has been donated 1,050 million for long-term healthcare. And likewise, you look at international euros, offshore banking, euro currency markets. This is organized in aftermath of World War II, when the Marshall developed first in London as banks needed a market for dollar. Dollars held outside the US are referred as, they're referred as euro dollars, even if they are held in the markets such as Singapore, Caribbean markets, and such as Grand Cayman. The euro currency market has been expanded in order to include other currencies such as yen and the British pound. Loan syndication and securitizations are others in line. Look at the impact of structural changes. There are mainly negative aspects of structural changes. Some of these negative aspects which are, which has got a greater liquidity. There is an adverse effect on the traditional activities of the international bank because of an easy flow of communication. The stocks in one market is transmitted easily to the other market and experiences greater liquidity, which is not a healthy sign for structural changes, as it helps the borrowers, lenders, and the investors, all of them to great extent, considerable extent, and the allocation of capital that might have positive bearing on the world output. Selection of sources and forms of funds. Through this objective selection forms their objectives. In addition to their main objective, their focus was also on minimization, matching, net worth ratio, legal and procedural formalities. Minimization of cost of funds, capital structure, including cash flow positions, risk factor, or access to retained earnings, global tax burden, host currency situations, host country liquidity positions, operating leverages, etc. Selection of an optimal maturity. Normally, these companies use short-term liabilities and long-term liabilities for different purpose. Legal and procedural formalities. Rising of funds in the countries where the actual issue is taken place. For example, if multinational company wants to issue banks in US market, these companies needs to fulfill the Indian laws as well as US laws, both. Uh, in this chapter, you can focus on multilateral, bilateral, euro, offshore banks, loan syndications, okay, IBRD, difference between euro and offshore banking, okay. Then we have exclusively multilateral development banks, and the banks which are majorly operating throughout the world are IBRD, IDA, ADB, Asian Development Bank, IFC, International Financing, EBRD, that is European Bank for Reconstruction and Development, African Development Bank, Islamic Development Bank, European Investment Bank, International Monetary Fund, IMF, okay, and then we have World Bank, International Finance Corporations, and International Monetary Funds, Asian Development Bank, etc. Now, each bank, when is that bank established? What are its functions and objectives are given in detail, bank by bank. Okay, so World Bank for 1945 with 189 members. The main objective of this bank was to provide long-term capitals to the member countries for reconstruction and development. It provided investments opportunities for member countries in the form of private loans and capital investments. Productive activities on conditional base also was available. Ensure this World Bank also focused on ensuring the implementation of development projects. And then look at the several World Banking functions, and how much top 10 borrowers, if you look at IDA, Nigeria, Vietnam, Tanzania, Bangladesh, Ethiopia, Kenya, Yemen, Palestine, and Nepal. All these are the countries with their percentages and amounts. Here you can add the latest tables. You can get these tables on World Bank portal reports. You can type it online and fetch all of them, the borrowers of IDI. On Google, if you look at, you will be getting nature and terms of funds, what type of funds are released, etc. Here are the details of all the cumulative lendings, theme-wise, region-wise, etc. from 2011 to 15, based on economic management, risk, rural development, social protections, trade and integration, urban developments, etc. And then comes, IBRD, the cumulative lendings, agriculture, fishing, forestry, education, health, and other social services. All these are the data of 2011 and 14, 11 to 15. And then comes the international financing corporations. the various functions of International Finance Corporation is, firstly, it is to invest in private firms in member countries in association with private investors without the government's guarantee. This also enables you to seek together the investment opportunities, private capital, foreign, etc. It enables you to stimulate the conditions conducive for the flow of private capital, etc. International Monetary Funds, IMF, it's an organization. Uh, it, it was conceived in the year 1944, July, and UN Monetary and Financial Conference held in the Mount Washington Hotel, Bretton Woods, New Hampshire, US. IMF came into formal existence on December 27, 1945, agreement made between 29 countries. Excuse me. Likewise, we have all these Asian Development Bank, okay, functions, size, structure is given, okay, and you can focus on various banks, their establishment dates, objectives, main functions, etc., with the current details of the numbers. And then followed by you have various instruments which are used in international financial markets. And these include various equities, bonds, secondary market operations, gains from international issues, etc. The procedure of issuing issuing the equity in the international market is, firstly, they have to plan for the size of issue and the government approval. Secondly, they have to go for the custodian bank, and the custodian bank would issue the ADRs and GDRs, wherein the share issuing company will ask the depository located in a foreign country to issue deposit DRs. And upon receiving this, the ratio is based on the economic collections of the country, earning potentials, industry fundamentals, etc. And then launching of ADRs and GDRs. All these depository receipts are negotiable financial instruments, usually in the form of equity. One of the most common type of depository receipts, DRs in the American depository receipts, which are introduced by the American market in the year 1927. These ADR are securities issued by company outside US, which is physically remained in the country, and usually the custody of a bank, in the custody of the bank, but traded on US stock exchanges. A GDR is very similar to ADR, and the GDR is financial instrument used by private markets to raise capital dominated in either US dollar or euros. The company enters the name of the investor in the registrar of the shareholder. The cost of issue equity is normally incurred in both the markets, domestic and international. This is around 3 to 4% of the issue amount. Documentation, yes, these includes various documents like prospectus, depository agreement, underwriting agreement, custodian and depository agreement, trust deed, agreement with the listing stock exchange, etc. International bonds are debt instruments and are issued by international agencies, companies. These are foreign bonds, euro bonds, global bonds, Foreign bond is issued by a country's national bond market by an issuer not domiciled in that country where the bonds are subsequently traded. Whereas euro bonds are those which are issued by different currency denomination and than that of in our country, which is the bond is issued here. Global is a debt obligation that is issued and the traded at the foreign bond market of one or more countries as well as in the euro bond market. We have sovereign bond, which is an obligation for a country, straight bond, which is a traditional type of bond, floating rate note, which is do not carry any fixed rate of interest and known as floating rate, convertible bond, these bonds that are convertible into equity, cocktail bonds, mixture of currencies, procedure of issue. There are different stages involved in the issue of international bonds. The stage one, an appointment of lead manager is done, followed by issue is launched, and next process of selling the bonds begins. The first 12 days are spent on sale campaign, which is known as offering period. On the 12th day, under writing agreement is signed, which is known as pricing period. Next 15 days, bonds are sold and delivered, and the necessary payments are made. Moving on to documents which are required for successful management of the bond. Prospectus, subscription agreement, legal term sheets, trust deed, listing agreement, paying agency agreement, underwriting agreement, selling agreement. Secondary market operations of international securities, gains from international issues. The various primary market gains are foreign exchange. Easily, various development activities of companies can use these investments in the form of foreign exchanges. Lower cost, diversification of the sources of funds, pricing of ADRs and GDRs, build the image of the company, secondary market gains, etc. The various benefits which can be, enjoyed by the secondary markets lies with increase in the share prices, lower the risk of high return, reduce volatility, possibility to invest in growing economy, enhances the liquidity of company, boost the market credibility, create healthy competitions, etc. Short-term and medium-term instruments. Euro notes. Euro notes are issued by the company for raising short-term funds in the international financial markets. They are denominated in any currency other than the currency of the country. No complexity in documentation. They can be issued which suit the requirements of various kind of borrowers. And the following simple documents are required, like number one, underwriting, paying, financial positions, information booklet. A few variety of euro note issue system have been evolved. And here there is a sole placement agent who allocates the notes among the investors at a uniform preset yields. Euro commercial papers are short-term funds and instruments issued by highly rated companies. Euro commercial papers and debt instruments are issued by a borrowers that needs funds for a short term. They are CPs having majority range from 1 day to 1 year. And these papers are classified as unsecured debt and hence the interest payment or principal payment obligations are not guaranteed by the collaterals. The settlement of euro commercial paper is done through one of the three clearings houses, Euroclear, Cedil, First Chicago, London. Total settlement is done through electronic mode only. The settlement is completed normally within 2 days. Medium-term euro notes. Medium-term euro notes are flexible debt instruments that are traded and issued outside the US and Canada. These instruments require fixed payments and are directly issued to the market with maturities that are less than 5 years. It shows the popularity of euro notes becoming a medium term in the financial market. The outstanding amount, which was rupees US 0.4 billion at the end of 1986, have been risen up to US dollars 9.6 billion by 1990. This clearly shows the popularity of medium-term euro notes. In this chapter, you can focus on various international bodies, foreign, in this, floating straight. All these are very short, differences can be asked. And look at the euro country equities, international bonds, euro bonds, floating straight bond. Differences between straight and floating rate bond are the various questions which you can expect. All right. So, yes, look at this model question paper, wherein it is divided into two sections of 70 marks. First section, you have to answer any 5. Each question is carrying 4 marks. You are given questions from A to H. Out of this, you have to answer any 5, 4 marks. So minimum you're supposed to write the definitions, meaning objectives, functions, at the most 1 page. Then you have section B, where you're supposed to answer any 3 of the following questions, and 10 marks are given for each question. All right. And then comes your section C, which is a kind of section where case studies analysis is given. Okay. So 7th question is carrying 20 marks. Look at the 7th question and try to focus on understanding what is asked, and accordingly, if it is a case study, try to analyze it and present your answer meaningfully and to the point with proper justification according to your knowledge and subject. All right, this will give you the maximum marks in section C. Okay, so this is all about your IFM model question paper. Now let's take an overview of your complete syllabus. Here goes block 1, 3 units, block 2, 3 units, block 3, again 3 units, block 4, 3 units, and block 5 also has got. So each block has got 3 units. All about international financial markets. Block 1 deals with the complete environmental aspects. Okay, which includes an overview of financial management, theories related to foreign exchange and exchange. Block 2 includes markets for foreign exchange and derivatives, including foreign exchange markets, currency futures, and currency options. Block 3, foreign exchange exposure management, which includes forecasting, measurement, management of foreign exchange exposures. Block 4 includes international investment decisions, including investments, capital budgeting, and portfolio management investments. And the final block 5 we discussed today includes financial markets, international financial markets, multilateral developmental banks, international financial market instruments. So try preparing well for your examination. Okay. As usual, almost in all the classes, I find no student turning up. But anyways, the show must go on, and so it is.